Here we go. Good morning, y'all. We are live. All right, so we got about 9 minutes until market open, and today my focus is on light bulb only. I'm going to show you this here. This is my app that I'm building. It's called the Consistency Lab. It's all about building consistency in trading to improve results, and it measures performance. So what this does is it kind of gamifies trading for good behavior, for discipline, and for adhering to your rules, because we all know that those characteristics lead to better days, and that you can follow your rules and be perfectly disciplined and end up red on the day. So why does that still feel bad? Because so much of trading, I feel like, focuses on the profit and loss, which is the byproduct of everything else. And so for me, I built this app to basically gamify and focus my efforts on performing in a positive way every day. And you can see, so the first 2 days of this month have been A and A minus. And we can look down and see some more of the statistics. They're just starting to populate, so there's not really a ton of data in here. And I still have some bugs to work out, like major leakage is actually incorrect because it's negligible, the half hour that I missed. But anyways, as this starts populating, it'll be super interesting to see the performance here. And yeah, let's get back to the chart. So what am I expecting for today? Well, today on NQ is overnight we made a new all-time high, which doesn't give us much liquidity to target. Here we are on the 1 hour chart. And what I really don't like is the sell side liquidity that's building on all time frames below. We have this trend line down in here, and we also on the 4 hour have below that. So here's the 1 hour trend line. Here's another 4 hour trend line. So at some point, this thing's setting up to reverse majorly. And my guess is I'm wondering if that's for NFP on Friday, which we do have NFP this week. So that means today is going to play a little bit differently, at least for me, a little more strict in terms of setup quality and in terms of risk I'm going to put up on the day, just willing to take one shot in this session. Going to the 15-minute chart, so ultimately what I'd like to see is I'd like to see price trade down, build some liquidity, and if price takes London low or Asia low and provides a setup, potentially something down in there, which may mean it might be a little bit later into the session before I get a setup, which, I like anticipating the time when it comes to these things to some extent, because if I'm expecting a setup at 9:30, because it looks like 9:30 is right where I want it to be for my setup, then I'm more ready to engage in the trade. And here, I'm not ready to engage at 9:30, but what I can tell you is I don't expect my setup at 9:30. And it could surprise me, but it's going to take a little bit of time to show it otherwise. And if we go down to the 1 minute chart, we can see that here pre-9:30 we had some accumulation after a nice pre-market sell-off. We tapped into the 12 a.m. Opening price. Here is the regular trading hours open. Here is the daily open price. Here is the previous day high. But what we can see is we're just building a whole bunch of trend line liquidity down in here. And so for me, I feel like 9:30 is going to want to potentially maybe pop up a little bit and then sell off. Oops. That's my guess. If it sells off, I don't have a setup I'm going to be interested in taking. I'm not yet ready to start shorting this thing until I get some higher time frame confirmation of bearish price delivery. So yeah, I think in terms of also expectations, one of the things that I've been looking at is, I don't know about you, but the last 5 weeks on the market have been tough on me. And one of the things that I looked at this weekend is I went through every week for the last 5 weeks. And I went through all 3 sessions. So sessions that I trade, which would be AM session. I traded a window at lunch, the lunch rate session. So that's about 1250 to 110. And then I also look at the PM session, and particularly there's 230 to 310 window that I look for setups. And looking across all 5 weeks, what I found was there was only an average of 2 A grade trades per week, at least for me. And I'm trading an inversion fair value gap and sometimes an inversion breaker. And while that last couple weeks have been increased, so if you look at the weeks, it was 0 A plus trades for the first week, which was FOMC, 1 A plus trade, which was NFP week, and then we had 2 A plus trades the next week, and then 4 A plus trades the fourth week, and then only 3 A plus trades the third week, which is, I think, pretty significant when you look at that. And obviously the trend has been upwards since the last FOMC NFP back-to-back red folder combo. And why this is important is because I guess I kind of set the expectation for myself that I'm not going to see a great setup every day. And so far that's been true. Monday, there was only 1 A setup. And even then Tuesday, we saw 1 A setup. So we've already hit the average of 2 A setups this week. And I'm expecting it to be a little higher because the trend does seem to be going up, but also we're in an NFP week. So nonetheless, just setting the expectations that, you know, I might not see much in terms of A plus trades this week. And so I don't have to chase price or even A grade at all. All right. So we got 2 minutes until open. So we're just kind of waiting and seeing what price does here. We got some equal lows formed right down here. Tail this candle right here. And just as a reminder to myself, you know, I'm here to read price. And that's also helpful too. A lot of what I speak here is just things I'm thinking out loud or would be thinking in my head as good reminders for myself. Because I feel like when I show up to the charts and I'm like looking for, it's easy to show up to the charts and just look for the trade because that's ultimately what you do. It's like at some point you get to a point where you just know what price is doing and you don't have to read it. Very much like how you can open up a book and you don't have to like think about the grammar, the punctuation, the spelling, you know, you just know how to read the book. But what happens in trading is I feel like we then become hyper focused on, at least at this stage for me, the setup, and that's all it becomes it's about. So then you're kind of looking for stuff that's not there to some extent, at least for me. And when I switch my focus back to reading price, my mind is not so much focused on forcing or making a setup happen as it is waiting for something so obvious to appear that my mind can't really ignore it. And it gives me something else to do too if I'm sitting here reading price. So at the moment we got YM is falling pretty hard. ES is just consolidating sideways, and NQ is the asset with the most strength pushing upwards. And we really just have this upwards, you know, a ascending wedge or whatever you might want to call it, retail terminology. So there's not much really to read here in price. All right, so 9:30 opens, trades up, sweeps liquidity. Oh, wow. So here we have just so far a one-stage delivery. We have this regular trading hours gap right down in here. Kind of useless being this small. So I'm just going to turn that off. Don't really need that. So here's a previous all-time high from earlier this morning. So we have a bit of an order block set right here. Here becomes, well, down here it would be the breaker and a 1-minute market structure shift. So there's really not much to do here. We're creating these little volume imbalances right between the candlesticks right there. but we're not really creating any gaps. We do have this fair value gap here, right here. And this then becomes a market maker buy model down here. All right, all-time highs swept. We did have this relative equal highs sitting up in here. They were quite a ways away from where price was, so I wasn't really caring about those a ton. And really, it's this, you know, I'd kind of seen this inversion form pre-market. I don't engage pre-market. And 12 a.m. had SMT and everything down there. And that ended up being the play. But it happened pre-market. This market is just wild. How parabolic it is. You know, look at this monthly chart. Look at this weekly chart. Look at this daily chart. Just day after day after day. At least it's easy to pick the bias for the day. So yeah, looking back, pretty much for me, there was no setup to be had so far. So at the moment, just chilling, seeing what happens. Just trying to remind myself some of the things, you know. I don't have to take a trade every day, and I don't get a trade every day. And I think that's important to keep in mind. Which is like not what anybody wants to hear, because everyone just wants to get the dopamine and take the trade, you know. But when I look back at my trading data, it's pretty easy to see that there are just some days where you shouldn't trade because you're just going to lose money. And we're not quite there yet. You know, today's NFP Wednesday, so the morning price action should be pretty clear, pretty clean. All right, just flipping time frames, seeing if anything pops out at me. This looks like it would probably be a solid short if you were comfortable with shorting all-time highs. There's no, maybe there's a 30-second entry. Not even. So this is some very volatile price action. It's not, it's just wicking back and forth, even on the 30-second time frame. All right, so sell side has been taken. What bums me out is buy side's been taken, so it really doesn't give any targets. And look at how steep this drop off is right here. You know, almost 100 handles in 2 candles. All right, so here's this liquidity that I'd marked out. That's all been swept. All right, so we have London low down in here, which is what I wanted to see price sweep London low for bullish continuation. But what's really disappointing is I wanted it to leave these highs intact, you know, a high here, a high here, a high here, or something, anything, you know, and then that would leave a little bit of trend line liquidity up in here, and then target that for a long down here at London low kind of thing. We do have 10 a.m. news. What's the red folder? It's ISM services PMI. So that's a medium mover. So we got the markets are currently decoupled. YM is now pushing hard up. ES is still in the middle, but nonetheless pushing down with NQ. All right, so let's go back over here to the 15-minute chart. So here's this 15-minute sell side imbalance. Price just wicked through it, slammed down. Here's this fair value gap. Kind of keeps getting inverted, trading down into 12 a.m. And then here is the London low, and then here's the Asia low. We do have some relative, semi-relative equal lows right down in here. They're on the 1 hour, I think. Yeah. And look here at ES, it's building up some nice liquidity on buy side. Same thing with YM, some nice buy side building. It's not happening on NQ. NQ is sweeping highs. So this is even like it could be the start of a swing high, because you need a lower low or a lower high, a higher high, and then a higher low in order to form a swing high. And I'm not calling the top at all. It's just the first I've seen that in NQ in a while. Okay, London low and these with 1 hour lows are swept. That puts us back into equilibrium of this local 1 hour range, not of the 4 hour. The 4 hour is much more overextended. Don't have any fresh gaps. We have these two fair value gaps that have been reused. Here on the 1 minute chart, going back to this. There's nothing really to do here with all of the, so now it did form these large gaps that finally stopped wicking through and balancing out these ranges. But for me, like, cool, here's one inversion, but you typically combine them, and on any time frame, the gap is just going to be huge. Additionally, there's no targets. So we just got to wait and see and be patient. And just as a reminder, the trader who wins, and I want to read this. An amateur trader is inside the emotion. You are the emotion and you act erratically. A professional trader observes the emotion. You see the emotion, but you follow the plan. One controls you and the other you control. And I found that to be a solid reminder that we need to just take step back, zoom out one level when we're trading, and observe the emotions. Note them, but follow the plan, because we can have emotions. We're humans, we're not robots. And we need to keep that in mind and separate ourselves from our emotions. And that helps detach us, at least for me in my experience, from the emotions that I'm experiencing, and stick to whatever my plan says I'm supposed to be doing. So we have that gap, we have this gap. Ultimately, you can combine them. When they're this big and this stacked together, you kind of combine them, as opposed to drawing fair value gaps individually. But this is just such a big gap that it's kind of useless, like this big of a gap is, what do you do with that? $350 tick stop loss. So now it looks like ES on the 1 minute at least is the weaker asset. NQ is in the middle, and YM is still the strongest at the moment. So what else do we see here? So for me, I feel like this is a pretty significant sign that this is a manipulation. I'm seeing this as an accumulation, manipulation, or potential delivery to sell side. So I'm keeping that in mind. Starting to wonder if the profile for the day is going to be New York high of the day, which it hasn't been that in a while. But just sweeping this liquidity up in here and leaving nothing to come back for makes me wonder if the New York session just wants to come back down and just kind of mitigate some of this liquidity down in here. Alrighty. Little tiny inversion. Not too exciting in terms of order flow reading today. What do we have? About 17 minutes until the 10 a.m. news. Now we got a bunch of lows here too, on the 15-minute. And what they can kind of do, I'll show them to you here in a second. See if you can see them. So all these lows stacked in here, we'll look at how it's just sweeping through them. This low, this low, this low, this low, and this low. When you hit one, they tend to domino through and take all the rest of them. So if it continued past there, I would expect it to take all these lows until this low, and then from there, see what happens. And even look at that. That's just a massive, massive 15-minute candle. Let's measure it. It looks massive. You know, 700 ticks or 190 handles. Huge. And so that tells us something. With that heavy of a sell-off, sorry, I got something in my eye. It's making me less and less expectant of a reversal. You know, unless price slows down and starts making some, you know, consolidation pattern, which it doesn't look like it wants to, and then sweeping Asia low, forming an inversion, targeting this liquidity, then sure, I'd be interested. But it's not. It's got these, you know, relative equal highs, and then it swept it on the 1 minute. This was wild right there. It's just getting more and more volatile, because when I was sitting here, you know, looking at the 1 minute, it looked like this, right? Oops, you're on the wrong chart. You know, the 1 minute looked like this, and these were starting to look like massive candles. And then now look at these candles, just huge. All right, coming down into Asia low. And then right below that's the previous day equilibrium. So above that level, the 50% level, you know, overall considered more bullish. And even below it, you can still be bullish, but it's just kind of a mental note zone for, okay, if we're trading below 50% of the previous day's candle, we might want to consider more carefully what price is doing if we want to continue being bullish. Looks like there's the previous month's high right there, which is going to be a probably strong level, but really nothing to do here. So I guess I'm going to time to zoom out. Let's just see what's going on. All right, so just clean this chart up. Coming back down to, we swept this low here. We have a low there. And then that puts us back into these gaps, which price has been using fair value gaps a lot lately. And I don't like that. It just makes me trust them less. And then we do have these, look at this, relative equal lows on the 1 hour. Not much here on the 4 hour. So on the daily, we have tapped into a daily volume imbalance. So we have a daily volume imbalance plus previous month's high, plus previous week's high, I guess that would be. Keeps going down, down, down. NQ's in freight train mode. 1,200 ticks. One of the things I try to do before each trading session is I try to do a little journal entry, and what I journal about is just kind of framing my mind for the day. And typically that involves letting go of any expectations for the day, because I feel like a lot of trading issues stem from expectations. Like, oh, I'm, whether you're red or you're green, it creates different deeper subconscious desires and expectations. And, you know, if you're red and maybe it makes you think, oh man, I need to get back these last 3 losses. Like I really got to get it. It's just irking me. I don't want to end the week red. Or if you're green, maybe you start thinking, I don't want to take any losses. Like I've had 4 wins in a row and my account's way up and I don't want to give any of that back. Let me just look here real quick. I don't think I have any interest in, time-wise, it's 9:50. Like there's just nothing to do right here. Yeah, nothing to do. So here's how I draw the gaps, kind of like that. There's just so many of them. It's just kind of like doesn't, I don't like to combine them when there's larger wicks between them, but unless I'm just making an inversion. But if I'm using gaps to like read order flow, then yeah. And so what I was saying is, like when we roll into a day and we have no expectations, I think it changes a lot. It's the Zen trader or something like that. And what we have to do, or what I tend to do, is look at the day as, it may or may not give me a setup. It may be red or it may be green, it may be break even. Today may make me feel closer to success at trading, or it may not. And by that, what I mean by that is like where I'm at currently, it would be a feeling of like, oh, I've finally started to make it. Like I'm making it, versus, oh, I don't know what I'm doing and I feel like I can't figure this out. And similarly, you may have expectations of getting an account to a certain level of profit. You're like, oh, if I get one win today, my account's going to be halfway to payout status. And so I always practice letting go of my expectations, both for my trades and for my day, or the outcome of the day. And then similar to that is letting go of the expectation for the next trade. Because individually we cannot predict them. It's a coin toss, and every trade, you don't know. You flat out don't know. You can't bet your life on it. And so if we just let go of the expectation of the next trade, similarly, I feel like it releases some of the stress, the tension, potentially the poor mistakes that we're going to make. And I try to walk into every day as best as I can, letting go of expectations. And it's hard. Like, even though I'm not focusing on P&L and such, even today, it's like there's just a part of me that's like, man, slow week, it would be really nice to get a good trade in. But I also have to realize, and that's part of what I told you earlier when I looked at the number of A-grade trades that were happening every week for me, I had to reset the expectation of like, I got to let go of that. Today could give me no setups. And that's been really helpful for me. All right, so we're just chilling, waiting, seeing. We got 5 minutes until this red folder news. Wonder if anything else is developed. So here, the 15-minute, really nice sweep. And in a bullish market, we just assume that sell side sweeps are manipulation for bullish delivery on a higher time frame. And so that's what I would assume here overall. But the two problems is there's no targets and there's no model yet. So we don't have all the pieces to the puzzle. And this is the context. Because everyone's focused, on the model, the trade, and less focused on the context. And they're two halves of the same thing. And so for the context, for me, basically what I look at is for higher time frame alignment. In other words, am I longing in a bullish market? Premium and discount. In other words, on a higher time frame than what my model's presenting, am I in a discount for longs, or am I in a premium for shorts? We want to look for a major liquidity sweep, which is partly the model. Sometimes that's wrapped up into the model. But for me, it's context. Is like the sweep can happen and there can be no model. There can be a model. There can be a different model. But so it's just, and if I put it in the context, then I tend to be zoomed out. I'm not looking at the 1 minute and seeing a 1 minute or a 5 minute liquidity sweep. I'm seeing a 1 hour liquidity sweep, a 4 hour liquidity sweep, a session liquidity sweep. ERL and IRL still intact. And so basically the idea is contextually, if we look at order flow, what I don't want to be doing is, let's say, here's the latest swing high and there's no price action to the left. I'm really not interested in taking a long right here for a new all-time high. What I really want to see is true IRL to ERL. So I want to see a retracement back down into, 50% of this range here, discount. And then that means I still have external range liquidity intact for the long. And that's what we're kind of looking at right now, is we have an external range. It's there. And the more we move away from it, the more it becomes significant. But I would love to see more price action, more swing highs being put in on the way down. But like if I took a long up in here, this kind of thing. Oh, you're not even on the right screen. Jeez Louise, I got to get better about that. This is, there's no external. There's very little external. I'm not so interested in that. Whereas this here, you're seeing there is internal and external range liquidity. So what else we have? We have unresolved liquidity. And so what this means is, with the context, I want to look at, like, if I'm longing and there's equal lows below, so if I wanted to take this as a long, pretend I did, and there's equal lows right down in here, pretend that, it's coming from way over here. I want to be aware of that. And maybe there's a whole bunch of 1 hour candles below providing a domino effect like this, all these levels to sweep. If there's unresolved liquidity below my model, I want to make sure that I'm aware of what's going on. I typically wouldn't want to take that trade unless it had some very clear SMT, especially with ES, but ES took that liquidity. So I want to make sure there's no unresolved liquidity. And then contextually, just an A-grade model and displacement. And that's indicating, is price displacing or moving, or is price consolidating? As well as the quality of the model for me. What else do we got? We have market conditions. So in other words, is the price action high probability or low probability? So we have certain times and certain days where it's lower probability, like NFP Friday morning. That's just going to be low probability conditions and I shouldn't be trading it. And then lastly, time, how to say, I need to come up with a word for this, but does the time make sense? And I've come to focus less on the actual macros, like I do to some extent. Like right now, I'm like, oh, we're in the 950 window. Okay, I can tend to expect something there. But more specifically, like time in the session. If I'm thinking it's the manipulation for the expansion of the session, but it's 11:20, I'm probably wrong because the session already did whatever it's going to do. So does the context of the time make sense? And so these are all things that I grade in addition to looking at the trade itself. So price is just kind of consolidating around the previous month's high, the previous day equilibrium. We don't have any SMT. Oh, that was a red folder. So ISM, PMI, not a big mover. But what sometimes can happen with these folders is the candle itself might not be huge, but then they become the catalyst for the move. We kind of do have a 3-minute gap right here, and then a separate 3-minute gap. But to me, it seems a little more like consolidation. There's not any high probability targets. There's no SMT with these lows, really. You know, so this is where it could make the model. But there's an SMT down at this low. I just don't have any targets. London highs taken. You know, we're in a discount. There's been a liquidity sweep. I'm curious to check NQ. Yeah, I was just curious if NQ maybe didn't sweep this high, then that could tell a little bit of a different story. But there's just nothing of a, no targets. This would be a pattern trade. So we just be chilling. So we can see here's another 3-minute fair value gap. Price did tap down into that gap. Let's see where it goes from there. So to me, I feel like it's starting to build a little bit more trend line below. Making me kind of wonder if price might want to start just kind of consolidating downwards for like an 11 a.m. low, and then that's the low of the session. It's kind of what I'm feeling. I could be totally wrong. But what I've noticed is on these heavy sell-off days, the reversal tends to come around 11:30 to 12, so somewhere in that zone, 11 to 12. And this is going to be one of those days where patience is paramount. Closing above there, order block, bullish order flow for now. What I'm not seeing is, especially after this large displacement towards sell side, if it were to be more bullish from here, I would like to see a little stronger of a response. We just wait. Now, ES, on the other hand, has a bunch of liquidity, so ES is the better looking asset to me. Starting to move a little bit, starting to see some displacement. but just slowly floating upwards. So for me, if I would have gotten into that, TP1 would be the top of that fair value gap. Looks like right now price is in the retracing back to the 5-minute fair value gap. So we'll see how it responds to this. And if this wick wasn't here, man, I'd be much more interested in a long. Coming into the 15-minute gap too. Just patient. All right. I think for me, I'm not going to see any setups. It might sweep back down, but like I said, that's going to probably be not until 11 or 11:30, which is a whole nother hour plus. Or this could be the setup, and I'm just not going to have a trade for this session. So I think I'm going to wrap it up there, and yeah, call that a day. I guess it's a probably an A-grade day performance-wise. I don't think I missed anything. I'll have to look at this further, but I know I knew it was going to probably want to drop down further, but my rules say I can't take shorts until we've had some higher time frame structure change. So I don't think I missed anything there. And then this 3-minute long, I just wasn't too interested in. So I think that's probably a solid day, but we'll find out. So yeah,